Hi everyone, welcome to Rapid Money. This is Bharat. I have my colleagues Sandeep and Balaji with me.
Hey,
Hello, how are you?
Very well, sir. What's up there? Is it cloudy with the wars of cloud up there in Dubai?
No, not really. It's still pretty hot.
Okay.
Winter's yet to start.
Yeah, winter's yet to start, but there could be a winter of war.
Yeah, absolutely.
yeah,
So
right.
that's what we're here to discuss uh,
Hmm.
at this time. So could there be a war? Or no? What are the markets anticipating? And what are the implications for investors, traders? Uh, you know, and how to de-risk yourself or benefit from the volatility. And so we're
Hmm.
not going to be talking much about geopolitics or the other angles around the war. Only
Yeah,
as much as relevant to markets.
right,
Okay, let's get started.
right,
Yep.
right. Yep, yeah. So, we saw that no, the tensions between Iran and Israel is quite high now,
Mm-hmm.
and of course, Iran being a major oil producer, I mean,
Mm-hmm.
there will be there is already a oil price surge. Okay. And
Mm-hmm.
it's most likely that I think the immediate effect is on the emerging market, right? So we saw, the markets going down in especially in India. So
Okay.
and so that's what's the immediate effect we saw. And interestingly, I think a couple of weeks back we discussed about the Fed rate cuts and then
Mm-hmm.
investments moving into the emerging market, and then now do we see a reverse, back to U.S. Treasuries?
Well,
Yeah,
actually, I mean, if you ask me, right,
Hmm.
I've been tracking gold treasuries and the equity markets in the U.S. Uh, so if you look at it, to me, I mean, purely from a dispassionate perspective, not involving the politics and the social implications. I mean,
Right.
war is bad business. But
Correct.
uh, that aside, right? Uh, one thing I've been noticing is uh, the U.S. equity markets haven't reacted very sharply. Number one,
Yeah, that's
there
true.
is there is a little bit of an uptick in VIX, the fear index, right? There is a little more of an uptick in the oil prices, but not the kind that we saw before the Ukraine war or in
Right.
the beginning days of the Ukraine war,
Right.
right?
Right.
So the I mean something tells me the market is not assigning a terribly high probability to the event of a serious war. I mean,
Right.
the market is still looking at it as, tit for tat attacks at some point,
Right.
until some point, right? When the markets might change their mind. So that's what I see happening. Yeah.
Do you think, it's very regional as of now, the war impact? It's not reached anywhere,
Well,
beyond
I mean,
that region. But,
it's not it
as in when it escalates, and it could pan out differently as well.
it's not even region wide as of now. I mean, from
Yeah,
again, I mean, both the physical war and in the minds of the market,
right.
right? It's still not even a region wide war, right? Of course, mainstream media gets a lot of clickbait headlines saying, World War III and shit. I
Right.
mean, I mean, God forbid, let that not be true, and
That's true. That's true. I mean,
let them get as many clicks as they want with those headlines without that materializing.
right, right. Yeah, yeah, absolutely. I think the same thing happened during the Russia-Ukraine as well. And we didn't see much, impact in the markets after that.
Yeah, I
But
think
I mean, there was a sudden jerk in the market, in the emerging markets especially. Definitely not in US. I know the markets didn't respond that quickly or anything. But there will be some kind of a speculation because oil being the major thing here, at play here.
Right. So disruption in the oil trade can,
Hmm.
upset markets.
Right,
But I mean, that said, Russia is actually a bigger producer of oil than Iran,
right,
commercially,
right.
right? And the Russian sanctions and stuff.
Hmm.
I mean, it
Yeah.
did impact the oil market. It did impact equity markets also for some time.
Hmm.
Uh, but after that, the equity markets recovered. The oil markets also came back to normal,
Hmm.
right? And ways were found to get around the sanctions by the developed countries themselves, the West, so-called. Uh,
Right.
yeah. So Sandeep, what do you think? So you're in the Middle East. So I mean,
Yes.
what is the pulse of the investors, the common man, the businesses? I mean, do you see a Main Street impact and a Wall Street or a Wall Street impact?
so. I mean, you guys kind of covered it all mostly. The sentiment really hasn't changed per se
Okay.
because obviously it hasn't kind of spilled over to different regions. Nothing of that sort has happened, right?
Right.
The market did have a bit of a reaction, which is as
Right.
expected, right, in terms of
Right.
uncertainty. So there was one day of
Right.
downside, and then I think we were holding prices well, especially the U.S. markets, right? Yes, the
Right.
emerging markets, like you said, I think they're more prone to the volatility in oil, especially the Indian market, because that's
Right.
our biggest
No, there
ticket.
there is actually a different reason for that.
Mhm.
I mean, this is slightly different than the war itself, right? So, a lot of emerging markets have capital controls,
Right,
and the biggest of them, China and India, still have capital controls,
right,
right? So, what that means is capital cannot move in and out freely,
Yeah.
right? So, what that means is if there is a surprise oil bill or any surprise forex bill, oil seems to be the biggest
yep,
for a lot of them. But any surprise forex bill will create a hole in the current account.
correct,
The current account deficit balloons, right?
Right.
And when that happens, because there are capital controls, it's not filled up instantly,
Hmm.
right? So which is
Yeah.
why I think current account deficit or expectation of a current account deficit is the reason emerging markets are so sensitive to oil prices, which
yep,
is, emerging markets shooting themselves in the foot in some way,
yep,
right?
absolutely.
If they get rid of capital controls, they can finance current account deficits the way the developed world does.
So I
So,
agree. So I think, given the situation, I think if you consider just Iran,
right,
for example, then there is a larger conflict at play. India doesn't import too much
right,
since these actions, but China does.
right. And it can
So
affect the overall supply.
absolutely, right? So I think between we consider India and China in this region, I think China will be probably a little bit more affected as compared to India if the oil supply or supply chains get disrupted, especially from Iran. It's one aspect, right? The second aspect of it is I think the emerging markets will probably see a higher inflation as compared to the US, right?
Right,
Because US is pretty much self-sufficient from an energy standpoint, right? So they're not
right,
Right.
really
That's
worried,
correct. They're
right?
not worried
So
about it. Yeah. Yeah.
exactly. So from a market standpoint, I think the US will still outperform the emerging markets, right? If the situation is as is or gets worse, right? So I think the
Yeah.
US equity markets should still do well and should
Mm.
not see a bigger downside, except for sudden uh, sentimental sentimental reasons or sudden emotional reasons. But other than that, I don't see too much of a downside,
Mm.
especially in the US markets, given that there is an election year. So there are many factors
Mm.
that come into play. Volatility
Correct,
will be there,
absolutely.
but I don't think the downside risk is too much.
Right, and
That's
also, I would say this, I mean, geopolitics is not my area of expertise, and pretty much none of ours. But that said, right, there won't be a bigger war if the U.S. wants to avoid it. The U.S. government, that I mean, because the U.S. public and businesses do not have a role in international policy, so which is sad, but they don't. Uh, so unless the U.S. government wants a war, or unless the U.S. government is okay with a war, there won't be one, right?
that's
But that said, you know what started the process of America becoming a superpower geopolitically? World War One and all the weapon sales to Europe. So
yeah.
U.S. I mean, some people in the U.S. tend to have a feeling that if the war is elsewhere, the U.S. would benefit
Right.
by financing, by equipping, by whatever.
Yeah.
But I think that's also very short-sighted. For
Mm.
example, if the trillions spent on Iraq were not spent, and people were given tax cuts instead, right? The U.S. economy would have been even better, right?
Yes, there's always that argument about the reason why they fund wars is obviously for the industry. So so there is
Right.
that
No, no,
aspect as well.
right. But I don't think the defense industry is U.S. economy or world economy,
Absolutely
right?
agreed.
So, you know, I mean, paying Paul, robbing Peter to pay Paul. There are so many more Peters.
Right.
Anyway, so let's
So,
talk about the markets,
yeah,
right?
right.
So
What do you
So
think?
mhm.
What do you think would be a good hedges? Defense stocks could be one, right? I mean, while you were,
Well, I wouldn't. I mean, I've seen this sector,
hmm,
uh, right? So there is a lot of interest in defense stocks
hmm,
during times like this,
right,
right? But that is short-lived.
right. Yeah. I
So
mean, that's speculative interest. I mean, on the long
yeah,
run,
so I
yes, you're
mean,
right. Yeah.
you could play for a short term. That I would put that as a short term trade. You know,
Right.
I I
Exactly.
I
So,
I wouldn't put that as a long term investment.
right. Yeah. Yeah.
Yeah, so that's one way to play that. And similarly, there could be a short term increased interest in EVs, regardless of the long
Hmm,
term story.
yeah,
And here I'm not commenting on the long term uh, merit or demerit of EVs.
yeah.
That remains the same, whatever it was.
Yeah.
I think
And and and
energy and
and
Yeah.
FMCG plays would be consumables and daily consumables and
Right.
energy would be the
Yeah.
I would say,
How about gold?
well, before gold, I mean, here's my favorite, crude,
Right.
right? So I would, look for a sustained, stable, I mean, not stable. I would look for a positional, sustained short position in crude, because it's only events like this that can create spikes,
Right.
right? I mean, can oil not go to $100 again? It's possible, but can
Hmm.
it go to 200? Highly unlikely,
Right.
right? So, and again, how much leverage to take is up to your risk tolerance,
Right. Right.
correct? So oil can go to 100. I mean, it's possible. I mean, one way to play that is wait for it to go to 100 and then short it, or or
Right.
or go short and hold it if you have the appetite for risk,
Yeah.
right? Because these are like spikes. These are not short-lived.
Yep, absolutely. Yeah,
Yeah.
I mean, if you have a lot of exposure in terms of equity and all of that, if you're long spot on equities or index funds and things like that, then yeah, getting some insurance in terms of puts would be a better thing to do at this stage. So just a couple of monthly puts would be a good hedge against
Right.
any kind of downside volatility that might be seen. Given that
Right.
there will be volatility. There is elections and then there is the
Right,
Middle Eastern situation. I think puts can be a good protection in terms of
Right.
insurance of the long spot.
right.
What do you think about crypto? Especially the BTCs.
So from what we saw the other day, I think we still haven't decoupled, and then from
Yeah.
Nasdaq. So typically, it's
Right.
still seen as a risk-on play, right? So I
Mhm.
wouldn't
It is.
be,
It is.
yeah, I wouldn't really consider any changes there. And if you have a portfolio, you hold on to it if you're long spot, things like that.
Mm.
But I don't see a very specific plan at play for crypto given the situation, right? Because it will pretty much react like how equity markets are reacting, right?
Yeah.
Right. So, I mean, if you're saying Nasdaq is not affected a lot, then there is a case to argue that crypto won't be affected a lot either.
Absolutely.
And I
Right.
would buy that because this is an inflationary disruption,
Yeah.
right? I
Correct.
mean, whether it's oil or any other kind of disruption. War is inflation, right? I mean,
Right.
somebody said war is politics by other means. I would say, war is inflation outside of Fed policy. So yeah.
Right.
Uh, so I mean, but same as a rate cut, pretty much.
Yeah.
So so given that war is inflationary, any inflation hedge should work well, and that applies to BTC as well.
Yeah, but that's what it's to be seen whether it is actually going to play out as an inflation hedge. So far, it hasn't. It's just that I hope it does
No,
in the
it
future.
does. It does, right? So, for example,
Yeah.
so when inflation reached 10% in the US and UK and most of Europe, so BTC reached its all-time highs
Yeah.
previously.
Yes, I
So
In
mean,
fact,
but that is that a coincidence or a correlation is yet to be seen,
no,
right?
it's a correlation triggered by the common reason, which is money supply.
yeah.
Yes. So if you look at what at least when inflation was at 10%, what caused the inflation? Right? It was COVID, right?
Right.
So
I mean, it was a response to COVID.
yes.
So
So and then
it,
at
it,
that
it it was
time,
a monetary response to COVID.
exactly. So there was a lot of free money doled out at that time. So let's not
Correct.
forget that bit where where the money came from, right? The money came from free money doled out by the governments, and then people were willing to bet against,
The
bet with
money came from central banks. I mean, it's
exactly.
essentially
Yeah.
Yeah.
So
So
I mean everything. It was an up only market, not only crypto, even equities went up, right?
correct.
So
Equity is also an inflation hedge, right?
absolutely,
Unless the
right.
inflation causes a recession,
yeah,
right?
Right.
Uh, but crypto is a better inflation hedge because
absolutely. From a supply standpoint, from a lot of
be-
a lot of other factors really help it to become an inflation hedge. It's
because it doesn't even care whether it's recessionary or not.
yes, true, agreed.
So,
I mean, it was the very reason it was built was for that. So I just hope
right.
it plays out like that.
Yeah, I
Yeah.
mean, we have very little data, but I think whatever data we
Yeah.
have does
Correct.
does indicate that it's working as an inflation hedge, but a volatile one.
Yes. So
And
Right.
and
Right.
Yeah. So I mean, it's good that we've been holding these levels, right?
Right.
Especially with all the things that are going on. It's the volatility as as compared to, let's say, 2012 or 2016, right? The kind of volatility that we used to see back in crypto markets, I think that has come down,
Mm.
you know, relatively, right?
Right.
Yes. Yeah.
So that's a good sign. That's a good sign, right? That's a very good sign. And it's been holding its price well. That's also a
Right.
good sign. So hopefully it can mature into a really good uh, inflation hedge. That's what we hope.
Right.
Yeah.
Yeah, I mean, also there has been some regulatory consistency. I mean, this year,
Yeah.
with the ETFs coming in and all that. So that would have also contributed to some, so to large extent, because back then there was, regulatory uncertainties was the biggest thing, right? At least things are moving in the right direction for BTC side.
Okay.